Okay, guys, let's get started. Good morning. We've had quite the turnaround overnight, and well, at least a little while ago, we were pressing highs, and we're pressing towards that 1830 to 1832 on ES. So one of the things I was mentioning yesterday was that we really did not have very much damage done at all. It was really a pullback in the context of a bull market, which is, and even in bear markets, if you look, usually we get responsive buying. And I was talking about how this pattern right here, and I'll show you, applies both to NQ and DS, although NQ is quite a bit more volatile. But this pattern, and it looks like this, just well, more people are joining than I thought they would. We open up and we'll kind of mess around. We'll make a move to the downside. But almost every day you'll see that we'll get a recovery. Wow, I did not mean to do that. Let's try that again. Really? We'll open up. We'll get a move to the downside. And then we get a recovery through midday. And then at the end of the day, after 1 o'clock, midday, we can go one of two ways. We can do this, we can do this, or we do this, right? But generally speaking, by the close, even if it were the lows, we'll push back up. This is true in bear markets and bull markets. If you go back and look at your charts, just pick out 40 down days, right? And you're going to see the majority in bear markets close at the bottom third of the day to half, but very few actually close at the lows. And if you look in in bull markets, right, oftentimes these down days end up looking like this, where we open, right, we fail early in the morning, and then the rest of the day is a slow grind back up, and often pushes to new highs, right? So everything that's been going on currently is in the context of a bull market. So let's talk about, since I'm running a little bit late, let's talk about the scenarios for today and what it'll look like. First of all, if you're not aware, there's Fed speakers all day long. I posted this on Twitter last night, and I will, in case you're unaware, I will repost this right now so everyone can see it off of the Twitter stream. I don't have it on StockTwits, but I will send the link out right after the meeting. But we do have speakers, and I believe Bernanke is either speaking at 12 p.m. Central Time or 1 p.m. Central Time. And there's a whole other host of Fed speakers all day long. So the first thing I do in my trade plan when I see that is I anticipate random big moves based off of something says. You can't plan for it, right? And it can hit you right in the middle of your trading day. It makes it very difficult, right? It makes it very difficult to react, and also when the news pops, it makes it hard to act in that situation. So you have one or two choices if you're going to trade that. You simply either have to accept that you're going to trade your levels and take your stops, or knowing that all those Fed speakers are going to speak. I have several coaching clients, and as well as other traders that I know, that when it's Fed day, when the ECB is announcing any of those items, they simply choose not to trade because their edge diminishes a bit, and they don't want to take the losses that are associated with having to trade in a higher risk environment, right? That being said, every time Bernanke's opened his mouth about anything, it's been about maintaining the status quo, and I imagine that is one of the reasons why we're getting this nice push-up this morning. So let's look at the push-up, and then we'll go from here, right? So currently we're trading 1829. That puts us right here, okay? This is gap fill. Now, again, what are we going to look at the open, from the open? First of all, a sign of strength. If we're unable to get gap fill, would be a sign of strength, right? First we have to get, but this is going to be a little bit tricky, right? First we have to get above the white zone. For me, to take the white zone here is an extremely aggressive trade, and there's no easy way to figure this out. Either you have to be willing to take the loss 2 points behind the zone, right? And you're hoping for basically a quick rejection down if we get up into that white zone, right? Or you simply have to be willing to, hold on one second here. Wow, I didn't realize that I had reached my max. I will have to upgrade this later. Fair enough. And I thought I had it set to 100. Very interesting. I apologize. I will get that fixed later. So again, going back to the theme, if you take the short here, right, you're hoping for a quick 2-point rip down, and then one or two things is going to happen, right? I would scale very quickly out of that white zone if I took it, right? And make sure it's in your trade plan. It's a higher risk trade, right? If I get this rejection, I will probably be very quick to scale out of these trades. Hold on one second here. Get this out of here. I'll be very quick to scale these trades. So then the next thing we're looking at, right? First, we have to get above the white zone to have an up day. Globex high is at 1832, right? And then the first place I'll be looking to take a short. Sorry, guys, I don't have enough on there. The first place I'll be looking to take a short will be up here in initial resistance, right here, right? What will I be looking for caution, right? Just like yesterday, we had 3 solid bars that were down into the zones. I'll be looking for the opposite here if we get short squeezed right out of the gate, right? So it'll look something like this. We'll open and we'll drive straight up like this. Hold on a second. Let me put out a note for everyone so they'll stop trying to get in. Guys, we're going to pause it for just a second, okay? Hold on one sec here. So I can put out a note. Wow, this is going to get old here. But I do not have time to go in and upgrade this thing and finish this meeting in time for the open. Okay, we got that taken care of. So I'll be looking for 1 or 2 or 3 large solid up drives that will essentially be the opposite of yesterday, right? That would give me caution at initial resistance, and if I take the short at that point, I will take the trade towards the back of this zone as opposed to the front of this zone, right? But if you look from 1832, right, up into 1838, that'll give us a nice stretch, right? So I'll look at where we're open, and then I'll measure. As far as filling the gap, right, let's take a look at another trade. Again, this is focusing right at the open. A sign of weakness, right? If we come in, if we get a sign of strength would be half gap. And then below that, gap fill. If we get below the gap fill, it does not mean that we have a weak day on our hands, right? We could simply come in and backside test this 1822 area. It'd be shocking if we did, right? But we'd still have a bullish context, right? As long as we maintain above yesterday's lows and Globex lows, essentially we still have a pullback within the context of a larger bull market, right? So the areas that I'll be looking, considering that trade, right? The areas I'll be looking, assuming we don't have an open drive up and an open drive down. Initial resistance, middle to back of the zone, depending on where the swing low is off of the open, right? If I'm an aggressive trader, which I am, but not most of my coaching clients are not yet, I may, based on the price action. When I say based on the price action, I'll be literally looking at the dome to see if the dome pauses within the white zone to take a trade. And there are times when this trade is extremely high odds, right? But usually it is, there have also been times, October, November, and parts of December, right? Where we're getting trades open up in just below the white zone and driving straight through it. Okay, so we've had periods of times where for months this was an excellent trade. There's been other times when there was just getting stopped time after time. You have to make the decision beforehand as to which way it's going to go, and I have no way of telling even a moment before it gets there. I have to look at the dome and see if there's rejection, right? And I'm going to try to scale as quickly as possible. If I get that trade, it's essentially a scalp. By that same token, looking at the bigger picture, right? If I can get up This is the gap from Friday, and even above that, Friday after the close, we pushed all the way up to 1848. I will look to find responsive buyers here, first time into the zone, and here if we get it. Although, and this is a possibility only because Bernanke's speaking. It would be a big stretch, right? 1826 to get up to 1846 is a 20-point stretch. It's rare to have an up day of more than 10 or 14 points, right? So, again, on the downside, let's look at our scenarios there. Scenario to the downside is we open up. We reject out of the white zone, right? We get to gap fill, unable to recover to the white zone. We come in and test the lows. I would expect responsive buyers on a good stretch down to the overnight lows and to yesterday's low, which is 1822.50, right? Excuse me, I believe it's 1822. I stand corrected. I would expect responsive buyers here. I most likely will be a buyer. Again, if we're getting, with one exception, right? If we open up like this, right, and we're getting a hard drive down into this zone, for an extra measure of safety, I'd want to see tick divergence coming in here or tick extreme. But if you'll notice, if you look on the majority of the trades, the gross majority of the time, the first time into a zone with a good stretch, we get that responsive trade for 2 points. Remember, my objective is simply to get 2 points. I'm not trying to get a 5, 8, or 10-point trade. I'm simply trying to stack trade after trade of 2 points. And as my trade size grows, I'm increasing. I'm not even looking to increase the number of trades. I'm looking for 1 to 2 trades a day, 2 points, and increase my trade size as my P&L grows in a very pre-planned manner, right? I'm looking to pre-plan my entry, my exit, and the only decision I have to make, and I make it depending on how far the market stretched, is whether or not I'm going to leave a trailer. But even with the trailers, you should have your trailers pre-planned for your exits, right? Just as I did yesterday afternoon. If you want to go back and look at the Twitter stream, you'll see that I had the exact plan for exiting out of my long that I took at 1822.50, and I left the last part for the end of the day. I had no idea that trade was going to be worth 5 or 6 points. I knew that I had a pretty good shot at 2 points, right? Everything else I leave up to the market, and I let the other traders determine whether they're going to take me out or not. Why do I do that? I want a high win rate, and I can't predict much more than beyond 2 points, right? And I know that I have extremely high odds at that point of getting those 2 points. Everything else is a gift. I'm very thankful for it, but I don't plan it, and I generally don't call that we're going to shoot one way or the other, right? The other scenario today, right, is if you look at the downside, and we're 10 minutes to the open, and what I think is more likely is that we end up with a balanced day today. If we look at the bigger picture, let me pull this over here real quick and look at a few trend lines. Excuse me. Again, I'm trying to shorten these up so everyone can go and get prepared for the day. So if we look at ES on the 24-hour, I had mentioned this yesterday. Let's pull this in a little bit. We had a downtrend going here, right? And you can see we also had the downtrend here that gave us resistance in the afternoon. Overnight, we've broken that. Another possible scenario to look at, right, is if we're going to be in balance. First of all, a backside test of this would be very normal, just like it did right here in the overnight session before continuing higher. I wouldn't be surprised to see a backside test of this area or even a slight break of this and then come back up, right, is one scenario. If we look where the areas on a 24-hour chart would give us areas of resistance, generally, the first thing you'll notice is even with this pop-up, you can see the general slope of the market is still to the downside, which is why I'm expecting responsive buyers, particularly in this area right here, this 1835 to 1840 area. I would expect somewhere in there to find a good trade back to the downside for 2 points, right? And this is what that's going to look like, right, if we have a balanced day. We're at 1832. We could easily push up into this area, and then depending on the news, it's going to come out of the Fed, which again is making it much harder to pre-plan what we're going to do, right? We come back in, and we could easily have a range day that looks just like this, right? This is the highs right here overnight. This is going back to excuse me, overnight, first day, this is where we opened up, and we had rejection in this area, right? It would certainly, thank you very much, TradeStation. It would certainly be conceivable, right? We have structure here that could support us. Again, this is a bigger picture, right? We have structure here that we have to get through in order to have any kind of a more significant downside move, right? We have structure here to hold us up. It would certainly make sense that we balance in that direction. Now, what would be some signs of balance, right? First of all, signs of balance, the tick will stay plus or minus 500 more or less all morning long, all throughout the first hour. And extremes, meaning when the tick gets to plus 800 or minus 800, will generally, not exactly, it's not a science and I don't take trades off of it, but it'll generally start to mark areas as tops and bottoms. Again, tick divergence on balanced days works great, and I do anticipate having a balanced day with the caveat of if any of the Fed speakers say, hey, we're throwing more free money out there, there's no reason why we can't shoot back to the highs. Okay, so really the balance is my scenario. Let's go and look at why I'm saying that, okay? If we look at, I still hate this drawing tool. If we look at the profiles, right? Let's go to the daily. We're good. First of all, we have a long all the way down to here. But secondly, if you'll notice, when we have large days like this, right, I really wouldn't even consider this a long liquidation, right? This is a short liquidation, technically, right? It's the inverse of a long liquidation, which we had right here, right? But if you'll notice these days, they're generally followed by balanced days. See that right here. You'll see that right here. We can see that right here, right? They still have good ranges, but they tend to be balanced. And if you go all the way back, you can look as much as you want. They tend to be balanced, right? And so right now I'm looking at a trading range, right? And that trading range could go from here down to here or extend it all the way down to really 1800, right? And we could end up longer term with a range that goes like this, down to here, all the way back up, and all the way back down while we consolidate this move right here and re-auction a lot of this stuff that did not get auctioned, right? So that's what I'm looking for on ES is really balance. How will we know if we're getting something different? Again, open drive up, 3 solid green sticks out of the gate, 3 solid red sticks out of the gate would be one indication, right? Tick being above and staying above or below 500 consistently, right? And the tick not being balanced itself, right? Staying consistently positive or consistently negative. All of those would give me signs that we are not in a balanced day. Number 2, on balanced days, something to watch for, by the way, and I want to switch back to this chart. Just as yesterday, after 10:30 a.m., right, the market tends to do this. So if you're preparing for the day, right, after we get to 10:30, which would be right here, the market will either tend to go flat and grindy, like we had right in this section. This covers probably 70%, 60 to 70% of all trading days is this New York lunch till the end of Central Time lunch. So 11 to 1 Central Time, this covers it. This is hard area to trade in, right? So if we have a downside move, okay, and we're not having a trend day down, that move will tend to look like this. Let's erase this. The move down. If we have a move to the downside, it'll tend to grind up like this. If we have a move to the upside, right, we're trading up here, the grind will look something like this without much of a pullback, and then at 1 o'clock, it'll make a decision. Now, you got to remember, everyone knows Ben is speaking, I'll check the time, but 12 or 1 o'clock. So you have to anticipate that people are going to be, I know if I were looking at it, right, I'm going to be anticipating that at some point, Ben's probably going to say something good. He has every single time. People aren't stupid. You got to figure people are going to try to move that price up, or at the very minimum, they're going to be actively buying any little sign of weakness in hopes that Ben's going to give us a big juice up to the upside, right? And give us a New Year's gift. So either way, I'm not looking to short after 10. Really, after 10 a.m., I would not be looking to put on any short positions. And if anything, if we somehow could get a drive lower, I'd be looking to pick up those drives lower for a move into that bend talk. Also remember, you don't have to trade. The one last piece here I don't want to forget about. I apologize. Let's take a look at NQ real quick. Excuse me. Let's go back to the profile. There's 3 minutes to go, and I'm not going to say anything profound here. So if y'all need to drop off, feel free. So a couple things. We've clearly broken this trend line on ES. We are no longer one-timing. I will go over one-timing. If you've been in my blog, you can email me if you want to know what one-timing is. I'm not going to go over now, but basically we traded the prior day. A few days ago, we traded below the prior day's low. That generally indicates a change in the behavior of the market, which is why I think we'll go into balance, right? In order for me to change that scenario, we're going to have to trade above Friday's end of day highs. I don't see that happening today without Bernanke giving us a big goose to the upside. Over on NQ. Okay, look at NQ. It's simply consolidating, guys. It's not trending up, but it's not trending down. It's not bearish. What are we going to need to see a bearish NQ? We're going to need to see it trading and holding below 35.50. 35.50 has now become key. I'll be watching that 35.50. I would expect responsive buyers the first time in there. And even if we got below, right, I would expect them to try to pop it back up and get above. If we had a good move to the downside below 35.50 on NQ and then came back up, I'd be looking to short that. But it's going to have to be a significant move below so I get a nice fat rotation and it gets stretched into 35.50. Again, for the open, what are we looking for? Go back to that chart real quick. What has to happen for the bull scenario? Mostly, we have to get above and trade above the white zone in order for buyers to be in control. Otherwise, if we get a move immediately up into this 1832 area, again, which would be Globex highs, right? I would look for rejection and an attempt at some point this morning. My suspicion is we'll either get half gap, depending on where where the swing high is, or we'll get a full gap, maybe even a push a little bit below. That does not mean that net we're going to tank below prior day's lows. I would suspect if we get rejection, it's going to kind of do more like one of these jobs, and that eventually we can get above Globex highs, heading into Bernanke into initial resistance. If I was going to guess at a pattern, that would be my guess. Again, I'll let the market dictate. So market just opened. I hope everyone has a great day. Make plenty of money, guys. Remember, no one trade matters. No one day matters. Let the market come to you. Ambush the people that are making the trading mistakes. You can be the one to profit from that instead of being the one that makes those trading mistakes. My name is Simon. I hope this helped out. Have a great day. Oh, sorry.